Hi, welcome to our channel. Yesterday we saw that we were expecting three moves to reach Y and we were expecting it to get formed at around 2400, 2410. But see this was a very sharp gap down and the price stayed there. So whatever we were expecting it to complete in three moves, it just did in one single gap. So what happened exactly? So while we shot the video, we also had some other markets going on and certain markets which just simply search SPX. Certain markets just simply made a lot of difference. Now, if you see this structure, what do we see here? We see here an ending diagonal, and there was a very sharp fall. Okay, so this sharp fall also made our Nifty and Bank Nifty fall a little. Now there is correlation, and we generally see a lot of these things are also dependent on the global markets. It could be say US markets, Singapore markets, or other markets as well. So while we were shooting the video yesterday, and if you see this here as well, the market is live there, and currently we are seeing a roughly about 0.38% fall. So fall is still, bound to continue for a little. Now this changed the entire course of Nifty and Bank Nifty overnight, and which we could see in a gap down opening. Now what happens after that because of that? So let's see what has changed and what basically will be or could be the next move forward. So this is definitely not yet going to reach, or this is not yet not has it has not happened. We'll see. We'll try to clear certain indices here. I'll try some. I'll keep this extension there though. Now let's understand this. Let's try to reason it out. I see a time period. It has taken about 64 bars from where it has started. We are also, we were calling this as X and say 64 bars is exactly where uh, this is currently at. Now, if I put a retracement from this point to the other point here, this is somewhere around 61%. So this is behaving like a flat correction now. If it does, this is behaving like an A and this is behaving like a B. Now this is where we are seeing that the markets are not really uh, letting us decide whether this is the time to go long on certain things or whether we expect a short or we expect a fall that could continue. Now if this is B, whatever we are calling, this B will get formed here. So if price starts reversing from here, which is very much a possibility, which can happen in the next few hours or so, as in next few sessions in the morning, next 75 minutes, next few sessions worth 75 minutes. Okay, so price can reverse from here, but what could be the range? So if you recall our discussions earlier, the flat correction and normal correction both will have targets up to 161%. This is normal range. So we won't be surprised if price actually falls till this particular point tomorrow. Tomorrow, say by 12ish or 1 o'clock. So 64 is the exact count here. We will have say a rule of overlap applied, say about 4 5 candles more. So this is the time, this is the entire Friday could make a low. This can still continue to reach here and this can probably reverse. Now, when will I consider a short position or a long position here? I need to see a, candlestick pattern, a reversal pattern that would indicate that there could be a change, that there could be a reversal in the price. And this candlestick pattern, I should see somewhere around the fib level, somewhere around the important price levels. Now, one more thing here. If I see this particular candle, this is 33 bars, this is roughly half, right? We will, or I'll try to, or the view that I will go long is when this particular price is broken. The high of this particular candle is broken is when probably I'll consider that there is a C of this entire move is getting formed, and probably we should consider a long from here. Till the time it's still a lot of volatility in the market and stuff, and we would not really be in a position to predict where and how fast certain moves could happen. So long could be initiated somewhere here, maybe after this price is crossed 24,350-ish, and what's the exact high for this? 24,355. At least till the time this gets crossed, uh, ideally we would not consider a long position from here. Now this is Nifty. Now let's see what is happening at an overall structure. Okay, we will change it if the price reverses from here, or probably a little more movement from the whole point now. Now this W has taken how much time? In 75 minutes, this W has taken about 211 bars. Now from this W till here, we are almost at how much? 130 bars. Another C will also take certain time. So whatever we were expecting earlier, that this could be A and this could be uh, making B, and then probably this entire structures B is getting formed somewhere at the close, somewhere close to the end of January, is what it looks like. It is moving towards. Now we called it A, then it looked like an X, then we called it X, and then we called this point W. Then we are again now trying to call this or reason it out to ABC kind of movement and calling this a flat correction. What all what all things are happening here? Why there is so much confusion? This confusion is being caused, or it is what you say? It is happening because there's a lot of volatility. There are so many factors which are increasing the volatility, and the kind of swings that we get, or the kind of moves that we get also, if you see, there are very big green candles, and also there are very big red candles. So the movement that you see usually on a few last few weeks or so, the movement in a day, or the price, whatever distance it covers in a day, is pretty large. So this kind of volatility will lead to this kind of confusion, or this kind of, I mean, it will look very similar to the other thing, and there are always certain possibilities that exist. So here is the question that the whole market is raising towards a retail investor, whether to make a good long portfolio or there is still time. So this is something individual needs to understand. Now, I don't see this as a complete reversal of trend, and we are in a impulsive kind of a move. We are still in correction. Now, this probably, if this becomes B and this then another C is getting formed somewhere, probably I'll mark it again as A and B. So this is still a correction, and after this, whatever high of this B would be reached, there will be another small or big, depending upon what C it is making. There will be a downside after this thing as well. So we are not really uh, completely bullish on this. So this is say kind of a B of a correction, which is again, it may look like an impulse, but the impulse is still not there, or the market is still not reversing any trend. Now let's see what the Bank Nifty story is. Okay, something similar to what we had seen in Nifty. Let's switch to 75 minutes. Again, we were thinking it will go in one or two, three moves kind of thing. It happened exactly in one gap down, and it's done. So again, let's try and see what time this could, is there any time kind of similarity for this as well. So this has also taken 64 bars. Everything is very much similar to Nifty, and 64 bar is somewhere here. So another 4-5 candles. Maybe Friday is the time when it should make bottom or bottom for this particular move. So when it's a Friday afternoonish, if we see a bullish candlestick pattern somewhere, there could be a trend reversal. But again, like we saw in Nifty, if we see the halfway, this particular candle, this is exactly halfway. So at least this candle's high, when it is broken, till the time this point price point is broken, which is 52,685, we will not try to go long on this. Again, the reason is same. There is volatility and things like that. So Friday again, we may see a lower low. Lower low meaning not a very big low compared to what we saw today. A lower low of 161.8% target, which is just very close to it right now. Some 300, 400 odd points more. And then the price could reverse back to make the final leg of this B, which will mark the end of it. So again here we were calling it ABC. We then called it as W. So this was actually B. Now if you see the rules for zigzag and flat, nowhere the books that were written in 1970s, 80s, 90s mention that the entire or mention the target for A is somewhere about 61.8% of the entire leg, right? So if you see here, this is very much beyond that. So such is the case, such is the volatility in the market currently. So we'll need to be very calculative in terms of what position we take, how do we hedge our positions, or how do we have a plan B to, if the trade doesn't go our way, what should be the strategy. All of that is very handy. This is the time where, because of this very strong volatility, we may lose some capital, and that is something we would like to avoid. So having a good trading strategy, thinking the different possibilities, and also the mitigations or the hedges that you can bring into the picture would make a lot of difference. And this is the time where, instead of going very aggressive with either the long or the short positions, it is the time to trade small quantities if we have to, or we'll probably stay away. Now this fall that we saw here, it was very much, we could have both in Nifty and Bank Nifty, we could have gotten it comfortably. Here the say probability of the trade going in your favor, or so the say the direction that you were intending, you as in all of us were intending, was quite high. Here at this point yesterday, after the price closed here, it wasn't really a chance, or it wasn't really a price where we had one single possibility. We had many, two, three possibilities it could go, and one of the possibilities that we discussed was this move like this. So we actually said that it would be like this, and it would go in three moves. But certain things like these happen, and the reason for all of it is volatility. Volatility is caused by multiple factors. So there is not one particular reason, or not one particular event that has happened somewhere that is leading to all of it. Everything is adding to the volatility eventually. So there are a lot of intrinsic factors, there are a lot of factors within the economy, there are a lot of factors in the global markets, etc., that would have some impact on our Indian markets as well. So this was about it. This was about the last analysis of this week. So tomorrow, when we complete this week, we'll again on weekend we'll come back and see the weekly outlook, just to see the trend where we are headed, and certain more studies on a slightly higher time frame, which is on a daily time frame. So thank you so much. Now, if you like our content, there is a lot of viewership we are seeing. There's a lot of numbers have been improved in terms of the viewership, also the kind of engagement that we were having last month. But there are a lot of people who are still not uh, commenting. They're still not liking, and so please do comment on the videos. Let us know what you think, whether you agree to it, whether you have some other view, or something where you would like us to cover certain more things, etc., so that we have those content created for you and we have more engagement and more discussions around this particular topic of Elliott Waves. So thank you so much. And if you haven't subscribed yet, do subscribe to the channel. Thank you so much.